Hello, everyone. Pretty sure we're live. Just double check. Yeah, all good. Okay, so let's get right into today's tape read. So today is Thursday, July 25. Hope everyone's having a good day. Better than I deserve to be. And let's see, 8:30 unemployment claims and advanced GDP. Let's go look at the charts. So, following up to what happened from yesterday's price action. Yeah, the biggest move of the year happened yesterday. So that was interesting to see. So if we go on daily time frame, what I think we're going to be reaching for is possibly on the weekly actually makes more sense. You see closing below this intermediate term low. It indicates that we're probably on the rest of the market, and this fair value gap is not going to get respected. As you can see, we get that closure below that low, and then you can see we have this small gap here, which is too small to be of any significance. And what I have noticed here is the midterm low, and I also have this mitigation block here, which if this is not going to hold, then this is probably not going to hold because mitigation blocks are best paired with imbalances, and when this happens, it's probably not going to hold. So some of my draws is going to be this low and this low. These are just some bearish draws that follow up with what's happening right now because as you guys know, um, if you guys have been watching the previous Outlook videos, you know that the the idea of being bullish is past. It's uh, it's just an idea that we have to let go of now, and we cannot be married to the idea of being bullish anymore, especially when price is showing us this. However, I do have one concern, which is this gap here. But with how the weekly is looking, I'm not expecting this to be of any significance because if we were to go up, then we would have went up from this area here. So let me add on something on this. This is already in a deep discount, and I did not note this on my earlier outlooks. But what should have happened here, if we were bullish, is we should have just continued down to the range equilibrium. Um, below the monthly open was great, and we instead of market shifting below this low, we would have swept this low and kept the respectance of this gap here. But what happened instead is that we closed below the midterm low, and then we start trading lower, and we also uh, displaced through this array here. And the difference between market shifts and liquidations, the array below or above can tell you the entire story. So let's say we have a low here, and then we start trading higher. If we come back down here and we um, breach this low here, identifying whether this was a liquidity sweep or a market shift will happen from two ways. The first way is that if we continue respecting the array at equilibrium of this range here, then we're likely to have a market shift and keep moving lower and treat this as a retracement. So let's say we had this move here, and then they simply have a array at equilibrium, and then we respect that, and then we keep spacing lower. However, if this move here was a liquidity sweep, what would have happened is we would have went down here, created that low, and then went down and made that range, and then while breaching this low, would have inversed the area equilibrium, and then used it as support, and then start trading higher to take the range high, and we inverse this as our price condition. And the other way is when we just have the array here. So the first way is for market shifts, is that if you have the array just hovering below within the example here, and then we get a tap into it, uh, that would be the liquidity sweep. We tap into it and then we start respecting it and moving higher, and that would be the liquidity sweep. But in some cases, when we have reacting off of this array like this, move over, and we keep spacing through it, then you can note that this was a market shift and that was not a liquidity sweep. So if you look back at what happened within the past 2 weeks, you can see we had this intermediate-term low here, and I should have noted that this low being closed below does not hint at bullish price action anymore, and we shouldn't be seeing lower prices right now. And if you can see what happened is, you have the array here, we tap into it, and then we initially get this wick higher, and this wick higher here, if we break it down to lower time frames, that was hard to note. Okay, so as you can see, as the first example I was talking about, once we got that sweep and then we started going back to the array at equilibrium. So if you measure the most previous range, and as well we have equal highs here, which is the most previous range, the area at equilibrium as this far upper fair value gap here. We trade into it, and then that would be the determining factor whether we continue lower, trade during another range low, or if we continue higher and then treat the weekly sweep as a sweep. But what happened is that we went back to equilibrium, to this equilibrium array, and then started dropping lower, and that gives us a confirmation that we're probably going to be seeing lower prices. So just noting this gap here, which I do not have so much hope for, because as you can see, doing the same thing to meet term low, probably going to be closed through, and we already swept it. There's no reason for us to be trading this much lower. And if we go on to the 4-hour, I think business. So the intermediate term low is a long-term low. As you can see, it's very much alone, and it's has a short-term low besides it to the left of it, and it has price action to the right of it. So yeah, if that makes sense, then we should probably get to probably inversing this gap here. And I want to hide this thing. It just bothers me. Okay, so let me go on the 15-minute. Okay, so the first thing you can note here is this range array at range equilibrium. We have another one here as well, so I go on to the 30-minute. I think that will be able to divide it. I think we might have to move into the high before we see it's actually lower. So we already moved into the array at equilibrium. Let me mark it out. So where it lines up with equilibrium. And also we had this previous one higher. This wick here is the order block, actually not the mitigation, it's the order block. So we went to the order block and then we went to the mitigation as well. And yeah, I'll take a look at pre-market price action. Let me turn on the, so there we go, that's that high taken out. So we apply the same concept of the liquidities versus market shifts. If this array gets displaced through, then it's probably going to be a market shift. And then the next trade is going to be at this gap here because it's higher in premium. And then if we start displacing after taking this high, then I'll be looking to catch a short, possibly to the range low, and then for probably possibly continuations to the withdrawals and liquidities. So yeah. Okay, so not much to do right now other than just watch, and I wanted to see what happened with the open range gap. So when it's good. Okay, so this looks like an interesting piece of price action. Let's break it down. So let's see. The 414 closing price is ends around here, and then 9:30 opening, right about there. So let's see what happens here. 9:30 opens, um, moves into the opening range gap, and then starts spacing lower. And then this move lower here creates this price range here that we retrace into, and then we run into this mitigation and run higher, and then we start the spacing lower back into our range condition. So so the opening range gap didn't play much significance. It was just used as the area to deliver for the after Judo swing. So if I go back onto the file, I want to see what did we really move into electronically wise. So I can't say there was much. The opening range gap didn't play much of a significance within our move. So I'm not going to be really paying attention to that. So okay, so something else I want to follow up on is the liquidity imbalance cycle. Um, what makes this retrace here anticipated to be respected is actually how we moved off of this 830 candle here. So you can see we had the 830 candle created, we had this intermediate term low, close to the intermediate term low, and we start trading higher. And if you go to the 5-minute, actually within the monthly 30 time space or time segment, um, this wants to load. Okay, here you can see that we wick into bearish arrays and then stay slower through all lows, market shifting through them. And we're very much treating old lows, old highs as sort of swoops rather than sweeps. So yeah, that's interesting to note. 15 minutes. Here. Okay, another thing I want to note is we have this this breaker here, so we have a high, low. So this high here, slow. There's a breaker. Then this is the unicorn gap, and the one that's even higher premium is this gap here. But if we could drop onto the 1 minute, you can see how we're very much not moving as we were moving through the first quadrant and second quadrant, or the third quadrant. If we wanted to reach up into a deeper discount, we would have done it with this placement, and we would have fiddled around like this, and we would have done it within a quick move, is what I'm trying to say. Something I don't like about this run higher here is that it's not really low resistance. If you go into the 5-minute, you can see that in retrospect, you can see that we have these big upload candles leaving imbalances behind. And these are what I don't like about this is what I'm trying to say is that price has objectives to meet here, and whether we respect them or not, that will depend on our time frame assessment. And that just makes it a bit less easier on price. It will demand more off of price. It will demand obviously more time. It will demand more price action, basically. It will demand more price action to be clicking through those. But if we had a bunch of rebalanced ranges here, then that would have been easier to cut through as we were going down, which is what I'm anticipating for it to reach. Because we picked up some speed, started moving a little bit heavier. We're running into this mitigation block right here. And yeah, not much to do now other than sit back and watch. As I said, a resistance run doesn't even something that you can notice here is how we're still rejecting off of this gap here many times, and as well as equal lows. So this equal lows would be nice to be breached, but as you can see, we have no fair value gap here that could lead us towards it. So that's unfortunate, but what are you gonna do? I gotta use the bathroom, but I'm gonna be watching the press action on my phone. So I'm just gonna mute my mic and I'll be back in a couple minutes. Yeah, hello everyone. Sorry, I took longer than I thought I would. Um, but yeah, let's get back to see what happened. Okay, so you can see the high that I had marked out. Displacing heavily through it, moved through the discount of the premium um, with displacement, and now we're ranging within the last quadrant. So nothing really specific I'm looking at right now, but what could be significant is this sweep right here into this fair value gap, and let me remove this box here. If we go on lower time frames, we find the fair value gap, 2 minute one there, and another 1 minute one. The highest time frame was on 2 minute. So this entry here to go to the range high would have been nice, but as you can see, the entry is horrible because you would have been stopped out immediately, and then if you had a swap stop, the entry would have been on this kind of close, and then stop loss. The first stop loss, if there was an unexpected dump, would be under the candle body, and the other one would be a close back through the inversion. That would be your soft stop, and that was triggered and you'd have been out, and price would have been heading towards your take profit right now. So that's unfortunate. You could have avoided the soft stop loss by noticing this gap here, but this is all hindsight. And the higher gap premium was fine just as well. So you would have had to wait for that one. And you can see range high was met. Right? Yeah, so it's for sure clean price action, but nothing really to go off of the initial shorts that I was looking for. That don't give me a setup, and inversing this range condition here. Uh, nothing really in mind. So nothing that I really have any interest in taking. This would have been decent, but the only thing I didn't like was this close back through it, because this would have happened in my time frame. But this was decent, if you would have taken the entry on the fair value gap and other stuff like this window, this would have also delivered neatly. What's up, EP Trades? How are you doing, man? Type something in the chat so I know you're still here. Did you take anything today? You're kind of delayed, but not so much. What time was it exactly? 9, 10. Okay, so let's look at what he took. Was it long or short? Guessing it was long. Yeah, okay. Okay, so let me just do a very quick read. And let me know if I'm reading what you saw. Okay, so let's see what's so looking at. Okay, so 9 a.m. candle opened here, manipulated lower into this gap right here, and then let's see. We have a kind of a breaker foundation, so we have the low and then the high, the lower low, and the higher high. So I guess were you catching the move from the lower low to the higher high towards this? You could confirm that we're taking the long from the lower low to the higher high in this breaker here. Very okay. Oh, I was looking a bit too far back. I was looking at the 30. Okay, okay. So the 15-minute array. I mean, I'm guessing it was this one, and the short-term low or nested low. I'm guessing was that low being swept. 5 minute. Okay. So that low being taken, tap into the 15-minute gap, and also what this looks nice here because this is a breaker, an opposite order flow. So you can see we have the high, low, higher high, and lower low. And what's nice about this is that the lower low being created was a turtle soup, so high probability final purge. That's what economics calls it. So this high probability final purge into a nested low and a minute array, and I'm guessing you took an inversion. So this line here. So the highest time frame inversion was at this high here and closed above it on this candle. And I want to see if there's any more gaps in premium. So no more gaps in a higher premium on the 2 minute. And the one in 1 minute is approximately the same, within the same region as the, was it the 4 minute one? No, I think it was a 2 minute. So I'm guessing you took this long. Um, soft, a soft stop around a close back within it, and then take profit at these at this high here. It's also within another breaker, so we have low high, low low, and then the higher high. Looks like you traded the higher high section of the from lower low to the breaker to the higher high breaker, and then this is so this is the breaker, and then this you could have been looking to use this as a support to go higher, but that didn't happen because of order flow and stuff. And maybe you had a hard stop around there, or this close back for this. And I know you're doing the negative RR. So was your trade something like this? Or did I have the stop parameters correct? That was your trade exactly? Or you're not doing that anymore? Why not? What happened? It was working out nicely for you. And how much was your stop? We got over equals. It was, but it was very long and tiring for just a challenge. Okay. I can't seem to find the relative equalizer you're talking about. And yeah, it's seems really good. Nice, man. That was a nice trade, honestly. Basically zero drawdown. I hate being in drawdown. It's so mentally taxing. Whenever I'm in drawdown, it would feel better to close the trade than win the trade. Wait, so that means like you're almost halfway of passing your funded account, right? The 50K one, the one you bought for the um UFR model. Okay. Yeah, well, what I'm watching right now is this fair value gap here, and no, honestly, let me just code. Chill. Oh yeah, yeah. What happened to your equity curve? 7 trades? Or are those partials? Did you actually take 7 trades or what? Oh, happy birthday, man. So you're back at basically my break even. Yeah, well, what you always tell me is that we learn from these experiences. Yeah, I see you today's morning. Um, secured $600. It's nice, man. But how much are you risking per trade? How much are you risking? So a bit over 0.5%. Okay, okay, I see, I see. Do you want to share what you're feeling about yesterday, or is this normal for you? Just like a small speed bump, and you'll be fine. Well, man, I'm glad you realized that, and hopefully, if your edge is proven and revised and backtested, then there is no reason for you to fail this challenge. And if anyone's gonna do it, it's gonna be you. And I wish you all the best. And I like how you said that you took responsibility and stopped. That's how I strive to be responsible. Because responsibility is the number one thing in all of trading. You should be responsible for what you do, for what buttons you press, for your analysis. You need to be responsible for your risk parameters, for watching out for harsh conditions. And that's one of the, I would say, the most difficult traits that you acquire in trading, and it's one of the most important ones. So it makes me hopeful that you know you can manage losses like these. Because I remember, I swear to God, when I used to enter on my Top Step account, my heart rate would really increase. I have an Apple Watch, and when I used to enter the trade, it would literally used to like beat me because my heart rate was increasing rapidly for no reason. And I would be sitting, I wouldn't be standing or nothing. I would be sitting on my desk, and pressing a button would make my heart race. And that's something I'm not really proud of, but it's something I'm going to be working to improve. And have the choice. Yeah, honestly, I need more time, first of all, revising my edge. the framework that I developed, and I need time. And I need time in dealing with lots of things. To be honest, I need time in dealing with winning trades. I need time in dealing with losing trades. I need time with dealing with and when to get in and when to get out. And even winning trades affect me. I think the the red streak that I went on a week ago, I think it was mainly contributed to how confident I was feeling after I had those. I had that green streak. I felt really confident, and I felt that okay, my framework is working. It's working, and it's putting me in profit. And I think that I failed to realize that with every single edge, if it's profitable, you're gonna have losing trades. There is no edge in the world. There's no model in the world. There's nothing in the world. There's no indicator. There's no ICT, gold bar, um, IPTA, PD array, or whatever that's going to make you 100% profitable. There's always going to be a losing trade within a winning system. So that's something that I really have to not only say, but understand and believe. I can say it as long as I want, but if I don't live it and if I don't understand it and if I don't truly believe it, then it will do me no good. And I think the only way to fix my faults, as you also told me, the only the only way that I can, there's no magic potion, there's no magic um, combination of words that someone can tell me and I will just change immediately. Um, it's built up of experience and it's built up of taking responsibility and it's built up from generally being responsible, to be responsible for your actions. Yeah, we had this nice low resistance run here, which might be taken out and then retrace back into the range. By the way, LP trades, I wanted to ask you your opinion on something. The guy that I bought his Discord, economics, he was saying that lunch is not real and the algorithms don't take a break, and that doesn't make sense. And you can look for your system in lunch hour and within PM as well, and there's no probability differences. He says that it's just been for PM why it's lower volume. It's just that the market would have been pumping out its volume within the AM, like in the morning. If it does that, then the PM will be less volatile. I wanna. What's your opinion on that? That lunch isn't the real thing. That I don't need to take a break. Do you think that makes sense? Well, you agree? Then what's the idea behind lunch? Mimics lunch. Why would you want to do that? What's the logic behind it? Yeah, sure. Call me. Turn on my desktop audience. Okay. Call me up at the trades. Yo, yo, what's up, man?
Hold on. Well, okay, wait, I was listening to your stream here in the Discord call notification. I thought it was me. All right. Yeah. What you were saying about lunch? Like, there's the like have you ever heard of days quarterly theory?
Yeah, I heard it.
Okay, so it's kind of like that. Like every session has its own function. If Asia consolidates, London is likely to look to seek Asia liquidity, and then New York is going to reverse and then seek the high of Asia and do the distribution. That's like a classic buy day where London makes the low of the day and then New York makes the high of the day at London close. Then the afternoon retraces back into the day's range and chops around down there. Uh, but sometimes it's not like that, right? So sometimes Asia will expand and then London will be really slow, or London will also expand and then the AM session will be really slow or choppy
Yeah,
because we've already throughout the day. So you have to go into every day thinking the algorithm has a specific goal today. That's your daily bias. What is it going to do today? How is it going to do it? And when? And you try and look at the London Asia sessions. So you like I don't recommend trading Asia because you usually wait for information during Asia. Just like um in the first session of the AM, you wait till 9:30 for that manipulation, kind of like middle AM session for more information. Same thing in London. You wait for the first 2 hours because you want to get a little bit of information on what the session's going to do. And all these things can line up fractally, to give you that daily bias. Now, lunch will do a number of things. Back in the day when the markets were controlled by men, there weren't algorithms; they were booked by men. And if you want to subscribe to the idea that they sat there and they booked price and they said, okay, where can we send price where it will create liquidity? And that's their number one goal. They tried to create liquidity. You know, if investors are buying ahead of lunch, and let's say the morning runs up, and they're placing their buy orders, oftentimes the lunch might try and run against those orders and then create stops, right? It might, and then the afternoon will retrace, or lunch might um after morning consolidation, it might start the actual delivery and manipulate and then go higher for the rest of the afternoon. So sometimes though lunch will just consolidate. It'll be really slow and unpredictable because it's choppy. Because its only purpose is to mimic the idea that investors are gone and they're not placing money into the markets. So it's just like 9:30 open. 9:30 open moves. Why? Because market's opening. The algorithm doesn't. It's not the fact that 9:30 open all the money comes into the market. It's just that the algorithm knows that 9:30 open is a reoccurring event, and so it's going to subscribe to the idea that it's going to start a delivery at 9:30 open. The same way it starts a macro. Macro is a list of instructions. It's going to start a macro delivery at lunch. What that is, it depends. What the morning did. It's starting the afternoon session. So it's usually not recommended to trade lunch because you want more information on what lunch did in order to trade the afternoon session. But sometimes you know what lunch will do because you have enough information from the AM session. Like if there was Powell speech and there's a lot of volatility, liquidity was introduced into the market. There's going to be stop orders at the high and low of the dealing range, and that if lunch is it would be likely to reach up into one of those areas if we've stayed consolidating ahead of it during one close. So that's sort of its purpose is it will have a purpose. What that is changes, but it may mimic sort of the idea that there's just not much volatility because it's lunch. It doesn't mean that it's because investors aren't placing orders into the market though.
you know, Aiden was speaking about quarterly theory and what you just spoke about how like if one session expands and the other one accumulates, if the other session accumulates and the other session expand. he spoke about it actually really recently, and he was saying that if you understand candle opens and candle closes, then there's no need for quarterly theory because quarterly theory, um, what I studied it for a while and I used it for a while on Forex, and what it is basically is that one quarter will accumulate, other one manipulate, and the other one will expand, and then the other one, the last one, the fourth quarter is X if it distributes or reverses or whatever, depends on market conditions. What Aidan actually
Yeah,
said is that within each quarter, it's a basically if you, like there's different quarters, right? There's 90-minute quarter, there's the hourly quarter, there's 4 hour quarters, right? And if you divide the entire day, the entire trading day, into 4 quarters, I think is it 8 hour quarters?
no, 6 hours.
Yeah. Okay, so 6 hours, and if you go on the 6 hour chart, each candle within the day has a open, high, and no close. And then if you can understand the accumulation parts of these candles and the manipulation parts of the next candle and the distribution part of the next candle after that,
Yeah,
you can frame your entire day without having to draw on a Gann box. And um, the basically what he's trying to say is the accumulation and manipulation times are not magical times. They're all based off of opens. So if you look
exactly.
at my live stream or should I share my screen?
Uh, where's Oh yeah, yeah, I have to open it. Do you want to, yeah, share your screen?
Yeah,
Better. Yeah, I agree with what he's saying, by the way.
yeah, it made a lot more sense when he explained it like that way instead of just basically saying there's magical times in the day where price will accumulate and then expand. So if you look at my chart really quickly, you can see the first 6 hours of the day accumulated, and then the next 6 hours either manipulated or distributed lower. We're still in the part of finding whether this was a manipulation or distribution. And the way we determine this candle here is by determining how this candle closes. And we determine how this candle closes by the use of PD areas. So you can see we have this 6 hour mitigation block here. So, and you can see how our price is heavily rejecting off of it. So what this tells me is that this was accumulation, expansion, retracement, expansion. This doesn't mean that this was accumulation, manipulation, and then we start distributing lower. We don't always distribute lower after a expansion, after accumulation, if that makes sense.
Yeah, that makes sense.
Yeah. So that's just how it explains that, and makes a lot more sense than magical times in the market where price accumulates and lunch and if this and that. And yeah.
Yeah, I used to talk to a lot of. I almost bought Day Theory's mentorship actually,
Hello?
and providing it for free on Discord. They kicked me because I had a YouTube
Hello?
channel.
Hello?
Yeah, hello.
Yeah, for the past like 3 minutes, my watch disconnected and I couldn't hear you. So
Yeah,
wait,
I used to be pretty close to some, like, no, not pretty close, but I
wait,
used to
hold on,
talk
hold on, hold
to
on.
some.
Wait,
Yeah,
give me a second, give me a second. My mom's home. 1 second.
okay.
Yeah, hello, sorry about that. Continue what you were saying.
Hold on, just typing something. Um, okay. What I was saying, yeah, if you go to my channel and look at some of the old videos, like from the beginning of the year, I used to be like a big quarterly theory trader.
Okay, I'm gonna end the live here because it's messing with my Wi-Fi. Anyway, I hope you guys enjoyed the AM session live, and I'll be looking to do more of these in the future. Thanks for watching.